Futures are one of my favorite markets to trade, and here's a beginner video of what are futures and how you can trade them. Because I know a lot of you want to get into futures, but you just might not know where to start. So let's get into it. I'm going to share my screen. What are futures? Futures is just a contract agreement to pretty much buy or sell an asset at a future date and price. So let's give you an example. A futures contract for crude oil, let's say it's 60 bucks a barrel, and a futures contract is available for $65 for 3 months out. And you think the price of crude oil is going to rise beyond the $65 by the time that contract expires. So you buy the contract and the market actually goes in your favor. Crude oil, the price goes up to $75. That means your prediction's right, and you could buy physical 100 barrels of crude oil that get shipped to your house, or you can just sell the contract and make that $10 profit. Yes, futures for oil are based on physical barrels of oil. You don't have to execute the contract and let it expire and actually take delivery of those barrels of oil. You could simply just sell the contract and make the profit. There's also S&P 500 futures. These are my favorite futures. These are most commonly used for hedging or to speculate on, price movements on a day-to-day basis. There's no physical asset for the S&P 500 futures, so these are settled in cash. So like crude oil is being traded on an underlying asset of 100 barrels of crude oil. Well, in the S&P 500 futures, S&P is just a basket of 500 stocks. There's no physical thing we could get delivered to our house, so it's just settled in cash. And now, why are futures better than stocks? Well, it's because there's way more leverage and you could start trading with a small amount. There's no $25,000 rule. So I know if you've been trying to get into stocks and actively day trading, making a lot of trades, you can't do that unless you have $25,000. With futures, there is no $25,000 pattern day trader rule. You could do as many trades as you want with a small account that is way under 25,000. I'm going to get to the minimums in a second. So what are the best futures to trade? Well, I like trading the S&P 500 futures mainly, and sometimes crude oil. Those are just my favorite. So how do you trade them? Well, it's different than stocks, all right? So futures are based on margin. Think of it like collateral. So you put some money up to gain control of a futures contract. And as you hold that contract, it'll go up in value, it'll go down in value, which increases or decreases your total account balance. So futures trade for 24 hours. It's not like the traditional stock market where you can only trade from 9:30 a.m. to 4 p.m. Eastern time. Futures trade 24 hours. There's little breaks in between. Here's all the futures trading hours. So you can actually trade futures overnight. So let's say you're working a 9 to 5 or something, and you can't trade throughout the day. Well, you could trade futures after hours. Okay, so you could trade futures 24 hours besides like the hour they're closed from 5 to 6. And there's different margins. So if you're trading overnight, you're going to need to put up more capital because brokers want more. They have higher requirements, higher margin requirements for people who are trading overnight because there's essentially more risk for the broker. So there's something called intraday margin and overnight margin. When you're day trading throughout the day, during the day session from like 9:30 to 5 p.m., your intraday margin is going to be really low as $50. So that means $50 you could control one futures contract. So there's intraday margin and overnight margin. This is just the capital requirement you need in your account to actually trade a futures contract. And brokers have this thing called low margin requirement. All right. So usually margin, which is the amount of money you need in your account in order to trade futures, usually it's around like $8,000 to $10,000. But a lot of brokers have low margin requirements. So you could essentially trade one S&P 500 contract with only $500 in your account. Yes, this is what allows you to trade with a low capital, right? So there's few brokers that allow you to do this, like the big brokers like TD Ameritrade. They want a lot more capital up front for you to trade futures. But these two brokers right here, you could get away with that $500 intraday margin. Okay, so NinjaTrader is one of them, and Trade-Evate. They have low account minimums and they have low margin requirements. All right, so now let's get into futures versus stocks. So typically stocks trade on a dollar basis, and futures, they don't trade the same. Okay, they trade on what's called ticks or point basis. So what the hell is a tick? Well, let's take a step back. With stocks, you buy a share of Apple, let's say it's $100, and the price of Apple goes up $1. Well, now your share is worth what? $101, right? You bought it at 100, it went up $1. Now you have 101 bucks. But with futures, it's a little different. Price moves in what's called ticks or points, right? So a tick is the smallest amount of movement that the market can move in. Okay, so with shares, it's usually, a stock can move by a penny at a time, right? Futures have different increments, so it could move at a quarter at a time, like 25 cents at a time, or some move a penny at a time. Every futures contract is different. This is how it looks. So if you're trading S&P futures, the minimum price fluctuation is going to be a quarter, all right? And every time it moves up 25 cents or one tick, your contract goes up or down $12.50. So each tick is valued at $12.50. So if you make a trade on ES and it goes 4 ticks in your favor, that's called 1 point, and that is worth $50, all right? Because 4 times $12.50 is 50, right? So all you need to trade one contract is $500. And this is an example from today where the market moved 40 points to the upside right here from the low right here around 3,885, let's call it, to 39.25. That's a 40-point move, which means you would have made, if you bought at the lows, I know we're playing, just for example purposes. So if you bought one contract at the lows and you sold it up here, you would have made $2,000 with one contract, and all you needed in your account is $500. All right, so that's what we call leverage, baby. But what if you don't even have 500 bucks? Well, don't worry. There's something called micro futures. It's the same exact contract, but a tenth of the size. So it's like a baby futures contract, right? So if you don't have $500, well, you could trade micro contracts with only $50. Intraday margin required, if you look down here, is only $50. Okay, and each tick value, instead of being $12.50, now it's going to be $1.25. So if you get in a trade, goes up 1 point, you're going to make $5. Okay, so there's a lot less risk with the micro futures. I highly recommend them, even if you have a lot of money to start with. Highly recommend you just start out trading the micro contracts to get used to how futures move and the price fluctuation and everything. So how many contracts are you able to trade? Well, S&P 500 futures contracts are the most liquid futures contract in the world, so you'll never have a problem trading as many contracts as you want. Now, how do you actually trade these things? Well, you got to learn technical analysis. That's going to be for a whole other video, but I just pulled up my NinjaTrader right here. So essentially what we're looking at is a bunch of candlesticks, but you're going to want to learn technical analysis. That's the best way to actively day trade futures, coming up with a strategy, being able to read these charts, and knowing when to get in, when to get out. So how do you actually execute the trades? Well, let's just go ahead and execute a trade. So let's say I see the market, we got a little pullback right now. There's some red candles, but overall we're uptrending on the day. Let me just draw like a trend line right here real quick. So let's say, we think the market's just going to keep rising, although it does look like it's starting to make it a little downtrend right here. Let's just buy one for fuck's sake. So we go into our order quantity. We're going to buy one contract. So keep in mind, you need $500 in your account to execute one contract, right? So we're just going to click buy market. It'll buy it. So now you'll see where the market, how it moves. It moves in quarters. So every 25 cents it moves, I'm making $12.50. So I bought it at $39.13.50. Right now I'm up a point already. So I made 50 bucks, right? And let's say you want to close the trade and get out. You're happy with the profit. You're happy with 1 point. You just click sell. So right there I made $50 just buying at $39.13.50, selling at $39.14.50. And yeah, that's pretty much, how you execute. That's the basics of futures. And I hope you enjoyed this beginner lesson on what is futures. I'm going to put out more videos on this channel, maybe some technical analysis videos, show you guys how I look at the markets. But I hope you enjoyed the beginner video, and I hope this inspires you to trade futures and make some money in the futures market. See you guys on the next one. If you like this video, make sure to subscribe and like this video, and I'll see you later.